know they're connecting. So a very, very warm welcome to this export-focused seminar run by ACBC Victoria with the support from Global Victoria. I'm Virginia Birrell. I'm the CEO of the Australia-China Business Council in Victoria, and I'm delighted we're able to present to you this inaugural event in our export series, which is a comprehensive program run into next year. Best wishes also to everyone going through the various state responses to COVID. It's a very intense lockdown period in New South Wales and Victoria. Other states are affected, so we do wish you well during these restrictions. I'd like to acknowledge the traditional owners of the lands around Australia on which we meet and pay my respects to their elders past, present and emerging. I can see from our registrations today we have a wide range of exporters and business leaders in our audience today. Most are yet to enter the China export market, and we have a few who are further along their export journey. Some of you may be here for market insights, which is a specialty of ACBC, in which case I'm sure you won't be disappointed with the calibre of our 5 speakers today. Along with China, countries like India, Japan, Indonesia, Thailand, Vietnam and Singapore are prospective export markets in the ASEAN region. We hope that the advice that we give you today will apply not only to the China market, but to help you expand into other regions and expand your export portfolio. We're delighted to curate some of the most experienced export leaders in the ACBC network to deliver valuable insights into maximising the Australia-China Free Trade Agreement, getting your paperwork right and funding your expansion into China. A copy of today's agenda, along with the speaker bios, has been emailed out to all of you beforehand. And also you can find a link in the chat window below. So my introductions today will be brief. I would like to welcome Mark Coleman, the Director of ical International Customs and Logistics, Colin Rex, Global Trade Professional Alliance, Yuri Schneider, Export Finance Australia, Chunguang Liu, Senior Advisor, and he is implementing the EMDG reform for Austrade. And it's very timely because those announcements will be coming out this week. And of course, Nick Henderson, the Deputy Commissioner for Greater China, Global Victoria, with whom we've worked closely for many years in his previous role at AsiaLink. Nick, we're delighted you can join us via Zoom. And I understand you're in Shanghai today, although you're normally based in Chengdu. So we look forward to you being a valuable part of this whole series. We'll shortly hear from our speakers and then move to the Q&A session. Please use the Q&A button on the bottom of your screen to submit your questions, and we'll try to get through as many as possible in the time available. Just a reminder, the event is being recorded and will be made available on the ACBC website in the Member Insights Centre after the event. So now, Nick, over to you to lead off the session. Thank you.
Thank you very much, Virginia. Fellow speakers, ACBC members and guest attendees. Good afternoon, all the way from Shanghai. It's a pleasure for me representing the Victorian Government and Global Victoria to provide an introduction to today's event. Global Victoria is very pleased to be supporting this excellent ACBC Victoria series of events, unpacking the elements and insights and tools that are important to navigate and create ongoing success in the China market, whether that be from the perspective of entering the market for the first time or growing in the market. Today's session is the first in a series of events that focuses on a broad range of elements and is broken into 3 parts. The first, why China? Second, growing in China? And third, which is strategic China briefings. Why China covers FTAs, logistics and shipping, market research, distribution and channel structure, building and maintaining commercial relationships, and tips for creating long-term success in the market. Growing your exports covers market research and insights, market diversification, and engaging with China given COVID environments. The China-Australia Free Trade Agreement is a trade mechanism that structures market access, favourable trading terms linked to tariff barriers in a way that enables preferential treatment for categories of goods and services. Known as ChAFTA, it was ratified on the 20th of December 2015 by the federal government and the government of the People's Republic of China after some considerable negotiation across a number of governments. In a more favourable bilateral relationship climate, it provides most favoured nation status across a number of categories of import and competitive positioning for Australian goods and services into China. This is a really important element because China is constantly signing free trade agreements with other countries, with the EU, with New Zealand, etc. Now, every time a free trade agreement gets signed, there are always special considerations and terms and conditions which give favourable treatment to those countries. This MFN treatment within ChAFTA means that if there are more favourable conditions out there, according to the agreement, we should be able to get access to those. So think of ChAFTA as a framework that structures the terms and conditions upon which much of the trade and investment flows operate between the two countries. When it was signed, it really was a landmark and has proven to be very beneficial for Australian businesses, although trading conditions have been challenging over the last year or so, it's provided significant benefit for Australian businesses. So to give you an example of some of the reduced tariff rates, and there are across a number of different categories. The tariff rates on infant formula and ice cream and a few other categories went from, say, 15–19% all the way to 0 in 2019. And across a schedule of different categories, there is a schedule of reductions to 0 all the way, over the next couple of years. The key is how to understand and leverage this agreement and then ensure that you are exporting according to product safety, labelling, quarantine, paperwork, and certification and registration requirements. So this enables you to appropriately trade, export/import, and sell into China. And these these rules and regulations can be complex and they differ by product category. And we're going to unpack some of that today. Given the current trade environment, the importance of ensuring that all of those elements are in place and are 100% in accordance with relevant rules and regulations is really, really critical. So one of the topics we're talking about today is getting the paperwork right. And often when products are stuck in a port, there are challenges in getting product cleared. There are a number of reasons, and people may take a default to one reason, but actually a lot of the time it is due to not meeting regulations or paperwork not in adherence with changing requirements from the Chinese authorities. So getting the paperwork right is critical. It's an important part of the overall market entry and market operation equation. Financing market entry and expansion from both a marketing and trade cash flow perspective are important elements of developing a successful business model to support a successful engagement with China and any other international marketplace. We will hear from both Austrade and Export Finance Australia to understand some of the support mechanisms in place in this particular area. Before I conclude, I just wanted to take a few minutes to speak briefly about the Victorian Government Trade and Investment Network in China. Now, we have the largest network out of any state in Australia. We have 5 offices and over 20 staff based in Beijing, Shanghai, Nanjing, in Hong Kong and in Chengdu. And we have team members that focus on trade, investment, international education as well. So it's quite a broad engagement with the market. And the Victorian Government has a deep and long-seated relationship and commitment to China, going back to the establishment of the Jiangsu Victoria sister state relationship in 1979. So we sort of not only support trade, investment, education, but a core part of what we do too is reinforcing and growing the people-to-people ties between Victoria and China, which are long and they're deep as well. So that's all in terms of introduction. We've got a great event ahead, and now I'll pass back to Virginia. Thank you.
Thanks very much, Nick. That's terrific overview, and that we do fully endorse the work of the Global Victoria up in China. We've got an outstanding network, and it's well regarded as the gold standard state around Australia for assistance. So do reach out if you need assistance from them. Now it's my pleasure to introduce Chunguang Liu, the Senior Advisor at Austrade, who is working on, as I mentioned, the export market development grants, and he will be able to give you a lovely overview in relation to funding your expansion into China and how to utilise the Austrade grants. So over to you, Chung. Thank you.
Thank you, Virginia. Good afternoon, dear colleagues and friends. 大家好，会说中文的朋友们。My name is Chunguang Liu, and I'm a Senior Advisor with the Export Market Development Grants. I sincerely thank ACBC Victoria for providing this speaking opportunity. I'm just going to share my screen and put my slides on before I start on my presentation. Just give me a second. Okay, as you may know, the Export Market Development Grants is designed to bring benefits to Australia by encouraging the creation, development, and expansion of foreign markets for Australian products. This is done so by providing targeted financial assistance for promotional activities and the development of marketing skills to Australian small, medium enterprises and their representative organizations. So today I'm going to take you through a few slides to get a taste of what the EMDG program can assist you with in a changing form. Since its inception in 1974, EMDG has been helping small, medium enterprises in Australia by reimbursing their eligible marketing expenditure to grow their exports in global markets. The number of different businesses that have successfully come through the scheme are as many as 50,000. And from 1st July 2021, the EMDG reimbursement scheme has become a grant program. Well, the new program has retained many features and benefits of the old scheme, such as it is still an entitlement-based program, which means that as long as you are eligible, you receive a grant. The focus still on export market development and promotion. There's no favor for a particular industry or export market. And there's a wide range of expenditure still available, including short trips to overseas, engaging marketing representative on the ground, and maintaining a marketing website. It still provides up to 8 financial years of support, and it is still a dollar for dollar funding on eligible marketing expenses. Well, we also have made improvements with the new program. For example, simplified legislation. We now have a simplified legislation compared with 18 pieces of EMDG legislation and instruments under the old scheme. There are only 2 essential legislations for this new program. The amended EMDG Act, which contains the heads of power, and the EMDG rules, which sets out the eligibility criteria and the transitional arrangements. We have also developed EMDG guidelines to put these legislative terms in plain English for you. We also have developed a streamlined application process. Just bear this in mind. I'm going to cover this a bit more in detail down the track. And just keep this in mind, for the time being. And the streamlined application process now compared with what we had before is rather simple. And for the new program, for one application, you can apply for an upfront funding agreement covering 2 or 3 year term, and there's no need to for you to apply every single year. Lastly, the grant agreement will tell you the amount of grants available to you before you start to undertake the promotion activity and incur eligible expenses. Here, I just want to illustrate some basic eligibility requirements and conditions for you. In order to be eligible for a grant, your turnover must be less than $20 million. Turnover is not defined in the legislations, but in the EMD guidelines, a reference has been given as annual turnover is the total ordinary income that you derive in the income year in the course of running a business. In order to be eligible, you have to be an Australian person. Australian persons is actually defined in the rules, and which refers to the 7 eligible kind of persons under Section 15 of the EMDG Act, including an individual whose principal place of residence is in Australia, a company established under an Australian law, a partnership with the more than 50% partners are Australian persons, and a trust of which the trustee is an Australian person. Well, you have to have a valid and active Australian business number, which is a requirement for all applicants and grantees. So you must hold a valid ABN at all times when you are applying for a grant and after you have entered into a grant agreement with us. This is another important requirement as well. There's an 8-year cap rule, which refers to any grants received on and from 1st of July 1990. So if you have received 8 financial years of support from us in the past, you will not be able to access the grant again. So in order to be eligible for grant, you also have to have an eligible product. And the main features of you to be eligible for, to have an eligible product under this section of the law is actually they must be of substantial Australian origin. So an eligible product includes goods that are made in Australia and also goods made outside Australia, subject to substantial Australian import requirement. An eligible product can also include a tourism service that is prescribed in EMDG rules, or another service that is subject to the substantial Australian import requirement. An eligible product also includes an event that is held in Australia, or if it's held online, provided by an Australian person. An eligible product includes an eligible intellectual property right or know-how, such as a trademark or a patent, and it must satisfy a substantial Australian import requirement. Another very important condition for this one is that they cannot fall into none of the services actually are above fall into their exclusive services categories, such as services relating to migration, sale or lease of real estate properties, or unlawful activities. Last but not least, there's a separate eligible category for software in the new program. Software can take many forms, as goods, as services, or as intellectual property rights or know-how. In the form they take, they will be assessed according to the particular category they fall into. But for this particular separate category of software, it must be or include the form of copyright. And the copyright must satisfy a substantial Australian import requirement. Okay, now you've come so far in the process to be an eligible person with an eligible product. it is the time to consider which tier of support is best suitable for you. If you are new but ready to export, you may consider Tier 1 with a 2-year term and a maximum of $40,000 grant amount per financial year. Austrade would also consider an applicant which has exported but only received 1 prior EMDG grant to qualify for this tier. If you are exporting and looking to expanding your marketing activities, you may consider Tier 2 with a 3-year term and up to $80,000 grant support per financial year. If you're expanding and exporting, but also looking to make a strategic shift, you may consider Tier 3 with a 3-year term and up to $150,000 per financial year. A strategic shift is a change in direction in order to target a new market or market segment driven by your business goals. A new market could be a new country, but could also include a different market in a large country, such as in the United States, starting to market in the East Coast versus West Coast. Details you may refer to EMD guidelines at 4.2.4. In the new program, we continue to support industry peak bodies in Australia. They can claim expenses of marketing their members' products in foreign country or training expenses for developing the skills of their members for marketing eligible products in a foreign country. Qualified representative bodies can have a 3-year term with up to $150,000 per financial year support. They're not bound by the 8-year cap rule or the $770,000 maximum grant amount. Here are some key steps for a streamlined grant application process that I mentioned earlier. The first step is you submit a grant application, and we receive and assess your grant application against the eligible criteria. And then we enter into a grant agreement with you if you're eligible. And then you can start undertaking promotion activities. And then you submit a milestone report, and based on which we make milestone payments to you. So if you want to have a bit more info about how to apply, and this website address, austrade.gov.au/EMDG, and you can scroll to EMDG from 1st July 2021. And here's the video demonstrating how you navigate on the web page to find relevant information. There's a particular part of the EMDG homepage, I want to mention that to you. It's called a checklist to apply, which is still under this section, austrade.gov.au/EMDG. That section contains some very useful information, including a sample application form and a sample grant agreements. So just be aware of a few things prior to apply. When you're applying, just remember that, bear in mind, you have to have evidence to show that you're eligible for an EMDG grant. As the one that I mentioned about must be Australian person with an eligible product. And the evidence to show your product is eligible, whether it's goods, services, IP, know-how, or software. So they must satisfy the eligible criteria. You also have to submit a copy of your 2020-21 balance sheet and a profit and loss statement to prove your turnover is less than $20 million. You would also have to submit a plan to market. The plan to market document can be just a one-page statement or a strategic roadmap for marketing or any other internal planning document. But it must explain why you're undertaking the proposed marketing, what business goals you are seeking to achieve through your marketing activities, how you will measure success, your overall budget for each financial year, where and what customers or demographic your marketing is targeting and what marketing activities you undertake. They could be as detailed, as strategic as you like. Here, there were some more screenshots for you to demonstrate to you about what we have assisted you with. In order for you to prepare the EMDG application online form launchment, for that purpose, we have developed some templates for you. The 4 templates we have developed is the plan to market, which we just covered before, and submission for being a representative body, and also submission for goods made outside Australia against this substantial Australian import requirement, and also services other than tourism submission, which also subject to substantial Australian import requirement. Here are the screenshots on the right to show you what the documents look like. In order for you to apply, you also have to bear in mind that you have to have a valid MyGov ID. MyGov ID is personal, but you can link MyGov ID with the Australian business number so you can represent your business. You also have to complete the online grant application via our online lodgement portal, which actually opened from Monday this week on the 16th. And you have to provide all the information requested. And when you fill out the application form, it will prompt you what compulsory information is to be, and also what the compulsory attachments are going to be like. You have to address and meet all eligible criteria and include all necessary attachments and submit the application by the closing date at 5 p.m. Australian Eastern Daylight Time on 30th of November 2021. Here are some, I just prepared some screenshots for you to give you a taste of what the online lodgement portal looks like. So you're landing on this page, log in with your MyGov ID. And then you're required to get a MyGov ID through this maybe portal or the MyGov ID app. Give you more instructions in terms of how to download the app and how to use it if you don't have one. And the 4 screenshots underneath are the actual application online forms to give you an overview of what the portal looks like with the eligible, with the 4 tabs: eligible applicant, eligible products, eligible expenses, and application finalization. So there are 4 sections of the online form. Just bear in mind that when we are excited about the new program has been launched, the EMDG reimbursement scheme is still running concurrently in the transition year. So now we have 2 programs running parallel to each other in the transition year. So you can still claim reimbursement of eligible expenses incurred up to 30th of June 2021. And you submit the application by 30th of November 2021. Or if you're using a qualified EMDG consultant, you can have extended lodgement period up until 28th of February 2022. Okay, that concludes my presentation, and thank you very much for your attention. I'll hand it back to Virginia. Thank you.
Thank you, Chung. That was invaluable. I know you do have to go to another meeting and are not able to stay for questions. We're very, very grateful you were able to attend today, because that's vitally important information. And I know you'll be available. If anyone has any questions, we can provide your email address if anyone would like to follow up with you on anything. So thank you very much, and please feel free to go whenever you need to.
Thank you.
Now, hand in hand with the EMDG grant process, we also have a process through the sorry, I've lost my place here, through the Export Finance Australia, beg your pardon, who are able to fund the expansion aspects of export and through their programs. And it's my pleasure to introduce Yuri Schneider, who is the Associate Director of Business Development, Victoria and Tasmania, who will take you through the process with his organisation. Thank you so much.
Thank you, Virginia. I'll just share my screen and Fantastic. So thank you very much. So Export Finance Australia. So how I'd like to generally present this is that you've spoken to Nick's team at Global Vic. You've had discussions with Collins about free market agreements to take advantage of. You've then caught up with Mark, and he's given you some ideas how to actually logistically export, and then you're starting to get things rolling, and then you meet up with the Austrade guys with Chunguang, and you've got a couple of grants and you're starting to export, and then things are starting to ramp up, and your bank's probably saying, I don't know if we can help you any further. That's when you come along to Export Finance Australia to help you make the next stage in your journey. So a bit about who we are. We're sort of one of those little organisations that sometimes people go, who are you? So we're the Australian Export Credit Agency. We're a corporate credit, corporate government entity. We line up with Austrade reporting to DFAT. We're an independent body, and we operate on a commercial basis. And everyone always asks, what does that mean? Well, we raise our own capital, so we need to charge interest and fees for our services. So we're not a free lending product. We work with banks generally as a complementary finance provider. So generally we're the market gap between what the banks can provide and what the customers need to assist with export markets. So we're generally working hand in hand. We're not here to compete. And we're also involved with customers who are in the export supply chain. So I'll elaborate on that a bit more as we go. So we're generally co-located with Austrade in most states, except for New South Wales, where we have our own premises. So if you're talking to your Austrade, you've got a relationship there where there's always a couple of us on the same floor in each state. So how can we help you? So a bit like a bank, we provide general lending products. We do export loans, which are generally traditional solutions for either term lending or working capital. We also do guarantees, which sometimes are to support customers with their existing lending facilities with the bank. So we provide a bank additional security to help them get comfortable to help support a customer. We also do bonds. Now, bonds are sort of an international form of bank guarantees. So generally in the case of you've won a big contract, they're going to give you 30% of the deposit, but they want a bank guarantee or bond back. We help support customers with that in international markets. And there's a various number of types of bonds that we can provide. We do this for a number of customers on an ongoing basis who do a lot of, especially like businesses who are in the engineering space, who need lots of ongoing bonding requirements. And then from a corporate finance perspective is that we tailor our facilities really to depending on what the customer needs. So we do provide quite a variety of solutions to assist customers from a working capital to from term loans. So you're looking to grow your business into China. You've got a couple of orders and now things are starting to ramp up. And your first question is, so how am I going to fund this? I've got some purchase orders. So one of the things we can do from a working capital is we can fund purchase orders, a percentage of them. Generally what this allows you to do is it allows you to do the pre-shipment. So rather than traditional debtor finance solutions in the Australian market, which are basically you've already sold and given the product over, and then you're able to do about up to 90 days of finance on the debtor, we're able to assist with financing pre-shipment. So you've got the purchase order, providing that finance to get the inputs to help through the manufacturing process and through the logistics of getting that product to your customer. So in terms of bank guarantees, that's what we outlined before. Sometimes in this export growth, there are certain businesses who, high volume businesses, and they require the bank's operational capacity on a day-to-day basis, rather than run a separate facility with us. So in those cases, we generally provide a guarantee towards the bank to underpin those facilities, generally called an export working finance capital guarantee. We don't do that all as much nowadays because it's a little bit unwieldy and it's a little bit more costly for the customer, but it's something we still do for specific sort of commodity traders, especially in primary products. And for those businesses who are profitable, we're willing to assist with CapEx. So in that regards is that if you've got a manufacturing plant, you've been exporting a bit, and now you've won a couple of really big contracts, and you need to upscale your facilities, we can assist with financing those export, that CapEx, which will support those additional export growth from a working capital perspective. But also on the other side is that sometimes customers need to get a foot on the ground. So they need to invest in offshore offices, 3PL sites, or capability. And so we can also provide term lending to support that growth into not only into China, but into other markets. So from whilst that's quite high level, the reality is we see a very number of different requirements. So don't cap yourself in terms of thinking we might not be able to do something. If you've got a need and a scenario you'd like to have a discussion with us, don't hesitate to reach out. So what are the businesses we can help? So from a real very basic level, sort of what we call a minimum criteria, and really this is probably just the starting point, is like you've been trading for a couple of years. We're looking at a businesses with at least 250,000 turnover as a minimum. And our minimum finance requirement is around 20 grand. But I would say our average transaction is around $1.5 to $2 million. So we do cover a fair size of businesses, especially in our SME business. So, it's 20 grand to around 50 million is the type of businesses we help. So from mums and dads to publicly listed entities, we do support in the market. Probably one of the things we also is we're generally coming in when your current banker is unable to provide support, and that's where we generally find our place in the market. We're generally a complement to an existing bank relationship, or a customer that's sort of at that stage where they're scaling up and they're not quite hitting the metrics to be bankable. That's where we can assist in that space. The other key thing is, so you've got at least a track record of being able to complete. So we're not really looking at able to support first-time exporters, but you've at least done a couple of exports and you look like you've delivered and they're coming back for more. So there's a proven track record of being able to deliver. And also in the same industry. We did have some challenges with businesses who had nothing to do with PPE, all of a sudden wanting to come to us last year to be PPE exporters, where they've never actually done anything or delivered in that market before. So trying to stay in the same lane in terms of previous track record. Next slide. So export supply chain. So especially this is very common in the mining services sector, where you've got a lot of businesses that support the mining industry that help export coal and iron ore and such like overseas. But really from a basic perspective is business A provides products and services to company B. Company B needs the product and or service to deliver on a contract with company C. And company C will be exporting the end product. So those businesses in the supply chain can be quite critical to the export. And if they don't provide what they do provide, company C can't export that product. So we're able to assist those businesses downstream who are part of the export supply chain. There is a bit of work to make sure it's clearly integral to that export, but there's actually a number of businesses who probably don't realise that they're critical to those exports, as they probably are aware of our ability to help them. So what's the difference we can make? So a classic example, especially here in Victoria, where we do a lot of dairy industry, is the Nature's Dairy business. We got approached by them through their banker, who wasn't able to help them any further. they were doing they had a lot of growth opportunities to export, especially of milk products into China, Japan, Southeast Asia. And their bank was at a time where they couldn't get additional support. So we were able to come in there with an export line of credit facility, which is effectively a working capital. And we were able to help grow their business through being able to finance their purchase orders. And I can say subsequently that facility has increased as we've been able to give them greater support into other markets. We do see the food industry as a naturally one, especially in Australia, into the China market. And we've seen, personally, I've done a number of transactions in the dairy and beef industry, as well as a number of food products into Walmart in China, which was last year I've come across a number of snack manufacturers who are providing product into those markets. So just from a national perspective, so I've got a contact, there's myself and there's one of my colleagues, Michael, in New South Wales. We've also got Alex Henderson in our WA office. We've got Andrew Perkins in our South Australian office, and we've got Adam Pearce in our Queensland office. So we're based nationally, and apart from New South Wales, we're all located at the Austrade. So if you can't find us or haven't been able to get a hold of us, reach out to an Austrader. They can always point you in the right direction to contact us. And also through our website, we have a number of ebooks and additionally assistance to help those first exporters who are starting to get up and going. So if you're looking for some additional information in exporting from our website, we've got a number of ebooks to help you get on the journey. So the real key thing is, and this is a bit of a mixed thing, is that we're trying to help existing export clients and help people attract, grow them. We're here to partner with you, and we're happy to talk to any clients or prospects at this stage who really want to grow the business from export market. Thank you very much.
Thank you, Yuri. We might save questions to the end. That was a very comprehensive and very practical, logical presentation. So I hope that's helped to answer a lot of the questions of our participants. And we look forward to obviously keeping in touch with you, and they can contact you after this session finishes as well. Now, as Nick alluded to, the China-Australia Free Trade Agreement, ChAFTA, 20th of December 2015. I think since that time, probably Collins Rex has read every page of ChAFTA. She's a bit of an encyclopedia about it. We've worked with her previously on our regional forums that we ran a few years ago now, which was a very comprehensive rollout of ChAFTA. And I should mention at this point that the architect of ChAFTA, the Honourable Andrew Robb AO, is zooming into this meeting, so we welcome him, and I hope if he has any questions he'll pop them in the Q&A box. So without further ado, Collins, I will hand over to you for your discussion on maximising ChAFTA. Thank you.
Thanks very much, Virginia. And yes, indeed, Virginia and I presented a whole series of events over several months. And I think by the end of it, Virginia, you probably had seen far more of ChAFTA than you'd ever expected that you would and ever particularly wanted to do. So, anyway, look, it was a good fun period in both our histories. So I'm delighted to be joining you today and to be revisiting some of those areas around ChAFTA and the sorts of things that you need to be aware of and the sorts of things that you need to do if you are going to maximise your access to ChAFTA and indeed look at some of the benefits that are accruing to it. So today we have a very limited period of time, which means we can't go into a huge amount of detail. But I thought while we are looking at ChAFTA, it's probably good to take just one step back and to look at free trade agreements and what they are and what they are not, because over the years I've certainly found that there's a great deal of confusion with many organisations around what the free trade agreement does and what your commercial agreements do, and never the twain shall meet in reality. So what are free trade agreements? Well, what they are is they're international treaties. They're treaties between two or more countries, that reduce the barriers to trade in goods and services and investment. They lead to improved market access, and they make trade freer. So what are they not? Free trade agreements are not agreements between companies or individuals. So a free trade agreement does not replace any commercial agreement that you might have in place, and that includes your contract of sale. Free trade agreements are not commercial agreements, and they don't always, in fact, they rarely address non-tariff barriers or those behind the border barriers. So free trade agreements make trade freer. They do not make trade free. And I think that's very important for everyone to understand when we start looking at free trade agreements and what they do and don't do. So FTAs, first and foremost, do reduce or remove tariff barriers. Sometimes those tariffs are removed on entry into force, and Nick alluded to some of those at the start of today's presentation. And sometimes those tariffs are reduced over a period of time. And certainly in the case of ChAFTA, over a period of 10 years, some of those barriers are reduced, which means tariffs that might have started at, for example, 10% at the start of the agreement, tear down to 0% at the end. In addition to removing or reducing tariff barriers, FTAs also address other trade issues. And for those of you that have looked at entering the China market, you will have noticed some of these already in place. So there are things like quotas. Intellectual property is addressed more often than not in free trade agreements, and certainly the mutual recognition of intellectual property. Foreign direct investment rules are included in free trade agreements. So how may an organization invest in another country? How may they not invest? There are usually improved accesses given to organizations under the free trade agreements. They address issues along the lines of standards. So again, those mutual recognition of standards from one country to another. They almost always address government procurement. So what is the access that is allowed under the free trade agreement, and how is that improved for various organizations? And then things like customs administration and trade facilitation are generally simplified as a result of free trade agreements. Now, FTAs can be bilateral, multilateral, plurilateral, and of course, ChAFTA is between two countries, so it is a bilateral agreement. So let's get now to the all-important claiming those benefits under ChAFTA for your business. There are essentially 4 steps involved in claiming the benefits. The first is classifying your goods for export. The second is determining how your goods are treated under ChAFTA. The third, understanding the rules of origin. And the fourth, certifying your goods under those rules of origin. So let's quickly trot through all the steps, and we'll touch on some of those technical terms as we move through the next few minutes. So the first step is essential. You cannot export without classifying your goods, and you certainly cannot accrue any benefits under ChAFTA or any other free trade agreement until you've classified those goods. All goods exiting Australia must be classified for tariff classification purposes. In ChAFTA, goods are identified by an internationally recognised system, and indeed this is for all goods exiting Australia. As this system is known as the Harmonised Commodity Description and Coding System, which we most commonly refer to as the HS system. And I'm sure most of you have at least seen the HS code referred to over time, even if you're not actively exporting yourself yet. So the HS system was developed by the World Customs Organization as a multi-purpose international product nomenclature that describes every type of good that is shipped. So literally every single thing that crosses a border, irrespective of what it is, if it is a physical good, there is an HS code that relates to that good. And it was done so that it makes it a lot simpler when you are describing what a good is on your customs declaration. You don't have to write whole paragraphs around the good. You can simply use an HS code, and everyone understands what that HS code relates to and what that good is. So customs officers use the HS code to clear every commodity that enters or crosses international borders. At its most basic form, the HS code consists of 6 digits. And having said that, it can go up to about 18 digits in some really complicated cases. But at its most basic level, 6 digits. The first 2 designate the HS ChAFTA, the second designate the HS heading, and the final 2 digits, the HS subheading. Now, it might seem really complicated, and in some cases it is, but in truth, all it means is that every single number relates to some descriptive component of that good. So if you look at the example on your screen there, HS code 1006.30 includes chapter 10 for cereals, 6 for rice, and subheading 30 for sub-milled or wholly milled rice. And it literally looks like the little diagram that you see on your screen. Now, in terms of the HS chapters, there are 97 of them. So at the most basic level, all goods are classified within 97 chapters. Chapter 101 is live animals, and 97 is antique goods and works of art, just to give you an idea. And you see an example of some of those chapter headings there. So what does the HS code do? Well, the HS code determines the general duty rate that relates to that particular good. It determines the rate under a free trade agreement. So there's the general rate, and then under ChAFTA, a different rate could apply. The HS code determines the product's specific rules of origin under the free trade agreement. So how is that good treated in terms of where it originates under the free trade agreement? And then there are certain rules of origin that relate specifically to a change in tariff classification. And all of the other concessions that might relate to that good under the free trade agreement are also contained in that tariff classification. So under the HS code, for example, things like quota, how much of a good may enter a particular country, will be encapsulated as well. Now, if you don't use the correct HS code, apart from the fact that, of course, you would be paying the wrong duty on that good, and that means you could be paying too much. If you have classified incorrectly, there could be compliance action against you. There will definitely be delays in clearing of your goods. If you've incorrectly labeled your good with a certain HS code and the container is opened for inspection and it's a completely different good, that good is not going to clear customs. You could overpay duty or you could underpay duty. Overpay, not good for your bank balance. Underpaying, not good for compliance. And of course, the tax man always wants their due, and the customs man similarly. So if you underpay the duty, they're not very happy with you. At worst, you could be seen as making a false statement to customs, which can relate to penalties, and at the most serious, prosecution, which of course is not a good position to be in. Now, classification is determined according to the terms of those headings and any section or chapter notes, because there are always notes that relate in the free trade agreement to those specific HS codes as well. And headings relate to complete goods, unfinished goods, and mixtures of goods with other goods, which could fundamentally change the nature of that good. Now, in the case of a good that has more than one potential description, and the example that I like to use is a ceiling fan that also has a light in it, 2 headings could apply. It could be a ceiling fan or it could be a light. In that case, you need to look at the more specific heading that relates to that good and which one is the most logical that you would apply. If it's a composite good, then you look at the good that gives it essential character. So is it the fan that gives it the character or the light that gives it the character? And if that still can't tell you, then if those rules don't assist you, use the heading that falls last in numerical order. Of course, there could be a completely different tariff that applies to the ceiling fan or indeed to the light. And that takes you to an advanced ruling. So if you really can't figure out by yourself what applies, you can get an advanced ruling and Chinese customs will tell you how that good will be classified going forward. The second step is then determining how your goods are treated under ChAFTA. So you figured out what the HS code is. Now you look at the duty rate to tell you what it is that relates to that good. And you can see there an extract from one of the customs schedules, the tariff schedules that relate under ChAFTA. And you can also see over a period of time from year 1 all the way to year 10, how a particular good will be treated and how the tariffs might change over the course of the agreement. Now, this stuff is complicated, and if you don't know your HS code, you have to start there. And there's a wonderful free trade agreement portal that the federal government has put up for you. So if you go to ftaportal.dfat.gov.au, you can figure out not just your HS code, but also how your good is treated. And you can see some extracts there about some of the other information that you can find on that page. The third step is then understanding the rule of origin, and it's literally goods that come from a particular place, and you have to have come from that particular place in order to get any benefits under the free trade agreement. So in this case, you're an Australian exporter, your goods originate in Australia in order for you to get those benefits. So ChAFTA's preferential rules of origin are those agreed criteria that are used to ensure that only goods originating in Australia enjoy duty preferences under the agreement. And if you think about it logically, of course, if they come from somewhere else, they shouldn't get the benefits of goods that come from Australia. And there are several things that you need to take into account because this is all about ensuring that you don't transship goods. So in general, a good will qualify as originating in Australia under ChAFTA if it is wholly obtained or produced entirely in Australia or China or both. If it is produced entirely in Australia from materials classified as originating, or it is manufactured in Australia using inputs from other countries while meeting the product-specific rule applicable to that good. We don't have time to go into the details of all of these today, but if you look at it in its most simple form, if you are an exporter of meat, for example, if that animal was born and grown and slaughtered in Australia, clearly it originates in Australia. If you've done something to that meat, you've baked it into a meat pie, for example, you then have to look at the other components of that meat pie to see whether it still satisfies the rules of origin. And there are certain rules that relate specifically to specific products. Now, the thought that I'm leaving you with in this step is that this stuff is really complicated. So you do need to get expert advice of how this relates to your particular good. And DFAT has a ChAFTA desk, and you can see the details there, and they can give you a lot of information about how your goods will be classified and whether they are originating or not. Now, once you've got your HS code, you've determined that your goods originate in Australia, you then need to certify your goods under ChAFTA, and you need to get the necessary documentation that proves that you have. So you've sorted out the first 3 steps. Now you need to get your certificate of origin or a declaration of origin. You can only use the declaration if you have an advanced ruling that we referred to earlier. So you need to use a certificate of origin or an origin ruling from Chinese customs. Also important to note that FTA benefits don't automatically apply unless you specifically apply the rules of ChAFTA using the rules of origin and the certificate of origin. You can still export your goods to China, but the base duty rate, the non-preferential rate, will apply. You have to actively seek the benefit. So goods originate in Australia, just to recap, they were wholly obtained, they were produced entirely in Australia from Australian materials, or they were manufactured in Australia or China using material from other sources, meeting the product-specific rules. And if they didn't originate here, they underwent substantial transformation. When you complete your certificate of origin, you will be asked which of the rules you have applied. Now, under ChAFTA, the certificate of origin issued by an authorized body is compulsory unless you have that advanced ruling or the value of goods is under 1,000 Australian dollars, but you don't have to claim preferential treatment if you don't want to. You get your certificate of origin from a number of sources. If you're an exporter, you get it from the Australian Chamber of Commerce and Industry and the state representatives, and that's VECI in Victoria. You can also get it from the Australian Industry Group, and you can get it from Wine Australia, formerly the Australian Grape and Wine Authority, and that is for wine and wine-related products. If you are importing from China, it's the General Administration of Customs of China and the China Council for the Promotion of International Trade. So once you've gone through all the steps, you literally complete a form which gives all the information around the good that you're wanting to export and you then get that form returned to you as your certificate of origin. There is a fee for every single certificate issued, and you need a certificate for every shipment and for every good in that shipment, or every class of good in that shipment. So do bear that in mind as well. You don't get it once and then it applies forever. The original of your certificate of origin is sent to the buyer along with all your shipping documents, and Mark is going to talk you through some of those documents in addition to that. You have to sign it prior to submitting to your chamber, and it will be then printed and returned to you within 24 hours at the latest. This is what your certificate of origin looks like. You will include, when you print it out, the overleaf instructions. It's one of the vagaries of this document that it has to be there. And take very careful note of all the fields in the certificate. You have to complete them all, and you have to complete them all correctly, or you will not have your certificate of origin. And I draw your attention, if you just look at the form on the left-hand side of the screen, under number 8, which is about halfway down the screen, you've got 3 little dots. Do not delete those when you complete the form, because if you do, your certificate will be void. And there's the final page of that certificate of origin. Some useful contacts for you to take note of: the Department of Foreign Affairs and Trade and its ChAFTA desk for all Australian customs matter, of course, Australia Border Force. And again, you can see the addresses there. And if you want information, particularly on those advanced rulings, then China Customs Service and the China Ministry of Commerce has an FTA network with a lot of information that you can access as well. And we've trotted through it at a rate of knots, but I hope that gives you some sense of what is involved if you're going to accrue the benefits from ChAFTA. And of course, we'll be taking questions in a panel after the final speaker today. So thanks very much, and I'll pass back to you, Virginia.
Thanks, Colin. That was a terrific presentation, and I hope it's helped a lot of people with some of those ChAFTA questions. As you alluded, we now are going to follow with Mark Coleman, who is listed as a freight manager, a transportologist. Mark, I love that, a professional name. Obviously, your experience in international customs and logistics is fantastically deep and experienced. So over to you, and we look forward to your presentation. Thank you.
Thank you, Virginia. I'm just going to talk briefly, because of time, we're going to talk briefly initially about what shipping documents are required for importing and exporting. Going to then move on to what are the current logistics industry issues that we're facing, and then talk about how to try and manage those particular issues. Now, in regards to documentation, China has actually come a long way with their documentation. In years gone by, it was a very complicated process to, if you were exporting to China, they were very much about having original documents. Documents had to be couriered, documents had to be signed, had to be in triplicate, and so forth. But the Chinese government have come a long way, and it's actually quite efficient in the main dealing with Chinese customs. We're now able to email documents to China. There's no need to courier documents in most cases. And the documents are very much standard with what other countries require. As an exporter, an invoice, a packing list, depending on if it's going air freight or sea freight, a bill of lading or an airway bill. If you're able to get your certificate of origin, the ChAFTA certificate of origin that we've just talked about. I'm finding that with most products that we're importing and exporting, with those 4 or 5 documents, we are able to get the goods cleared through customs, either in Australia for importers and Australia for exporters. If you're new to either importing or exporting, it's really important that you have a very experienced and knowledgeable logistics company behind you. You want to be communicating with that company in advance about what documents are required, what details are required. For importers, I regularly have situations where an importer will be negotiating a deal with a supplier overseas. They will purchase the order, the goods will be shipped, and after the goods have departed and almost arrived in Australia, we get contacted and say, look, here's the documents. Can you clear it through customs? And at that stage, we're finding that there's not the correct documents, not the correct details. So it's really important that you communicate with your logistics company in advance. From the labelling requirements, I don't know how often it is the cargo arrives in Australia and the cargo is not being correctly labelled. In the case of food, what are the, what's the ingredients lists and so forth? Does it need to be stated on the packaging? So before you confirm any orders for you, if you're an importer, contact your logistics company and ask them, I'm importing this product. What documents do I need? What details are needed on those documents? What are the labelling requirements for that document? Once you've got that information, communicate that through to your supplier overseas and ensure that all the conditions are met. As an exporter, if you're new to exporting, once again, contact your logistics company and say, look, I'm exporting this product off to China. What documents do I require? What conditions and details need to be on those documents? I've regularly had situations where I've been dragged in to solve problems where the deal has already been done, payment has already been received, but because of the type of product and where we're going to, there are certain conditions that that exporter is unable to actually export those goods because they don't have the licenses or the accreditation. So don't drag your logistics company in once the deal has been done. Definitely have discussions with them at the early stages, whether you're buying or selling the goods. In the main, China is actually quite easy to import and export from, provided that you meet all of the conditions. As I said, we don't have time to go in particular products of what is required, but in the main, an invoice, a packing list, a bill of lading, a ChAFTA certificate of origin where possible. And if you've got food, there may be a health certificate required. Once again, communicate with your logistics company in advance about what health certificates are required, what is required to get those actual health certificates. Going to talk about the current issues that we are facing in the logistics industry. I've been doing this for over 30 years, and there's always something that pops up and surprises me about what's changed, what's happening, and so forth. At the moment, it is a daily event where I'm reading something new that is actually changing in the logistics industry. Pre-COVID, I was able to ship a 40-foot container. So where that's the large size containers, I could ship off a 40-foot container from Australia to China for $50 US. That's correct, $50 US for an entire 40-foot container. Today, we're looking at around $6,000, $7,000. So from a percentage point of view, freight rate has gone up through the roof. Freight rates used to be very stable on the export side of things. Pre-COVID, I was quoting rates that had not increased in 5, 7, or even 10 years in some case. So my freight rate that I was quoting in 2019 was the same freight rate that I was quoting to clients in 2014 and 15. So it was very, very stable. At the moment, export rates are going up on a monthly basis and they are continuing to increase. On the import side, freight rates did go up a little, then they would come down a little. They would increase by a few hundred and then they would decrease by a few hundred. At the moment, freight rates once again are increasing on a weekly basis. So it is very hard to manage. I was able to book containers for next week's vessel. At the moment, if you come to me and said, look, Mark, I've got a container to move, I may not be able to get space on a vessel for another 3, 4, 6 weeks, depending on which port you're going to. In regards to various ports around the world, places like New Zealand, I can't get space on a vessel for 3 months. The Middle East subcontinent, once again, 2 to 3 months before I can actually get space on a vessel. That's how actual bad it is. I actually have bookings in place that I don't know what the freight rate is going to be. So have a think about that. You ring me up and say, Mark, I want to be booked on the next vessel. I say to you, yes, I've got you space, but that vessel's not departing until 2 months' time. You're happy with that, you accept it. And then you ask me, okay, I've got my confirmed booking. I'm departing in 2 months' time. Mark, what are you going to charge me? And I'll actually say, I don't know. The shipping lines will not quote us the freight rates because they just seem to be increasing them on a weekly, monthly basis. It is out of control. Why is all this happening? Why are freight rates going from a few hundred to a few thousand? Import rates used to be $2,000 or $3,000 to import a container. We're now looking at $6,000 and $7,000. We regularly do shipments from China to the US and China to Europe. In the past, to get from, say, China to the UK used to be $2,000 to $3,000. Today, you are heading towards $25,000 US for one container. Freight rates have gone up. Why is this happening? It's totally driven by COVID. We haven't seen an increase in the number of containers being shipped around, but we've seen that the vessels are slowing down because they're being held up at ports around the world. Not too long ago, we had the largest port in southern China closed for a month. That caused a massive backlog of shipments out of southern China. Because of that backlog, the shipping lines took advantage of that and started increasing their freight rates that were very much out of control. So in the past, where a vessel would go up to China and back to Australia within 3 or 4 weeks, that trip is now taking 6 to 8 weeks. So we've got the same number of vessels going back and forth. We have the same number of containers going back and forth, but that journey is taking longer for that vessel, which is causing a backlog. That means there's a surge in bookings, and the shipping lines are taking advantage of that. So I could talk about all sorts of stories about what's going on, with freight rates going up. But the question is, how do we manage that? I'm speaking with a lot of my customers, importers and exporters, and saying you now need to seriously start forward planning. You need to be very close with your suppliers and your customers. In the case of importers, you need to be talking to your suppliers early, find out what restrictions they're having with their factory. Are they working on a reduced staffing level because of COVID, and they're slower in producing the orders? You then need to find out, all right, how far ahead do I need to place an order? And also speaking to your logistics company weeks, months in advance about forward planning your bookings. Don't contact your logistics company and plan on getting next week's vessel. So it's about forward planning. As an exporter, exactly the same thing. Communicate with your customers. Contact all your customers and say, look, we're having some either production issues or logistics issues. What are you planning on ordering over the next 2, 3, 4 months? And start getting those orders into the system early. Also, I see cash flow is going to be a huge issue that customers need to start managing. So start communicating with your banks, where as an importer, you place an order today. That means you usually got to place a deposit. So that means money out of your bank account. In the past, you would place your deposit today. In a week or two, the goods would be shipped. 3 weeks later, they would be in your warehouse and you could sell them. Because of these delays, you're placing your deposit today. Your supplier may take a month, 2 months to even get the goods ready. So that means that money is out of your account for 2 months. It then may, rather than taking 2 or 3 weeks to get to Australia, it could take 6 weeks to get to Australia. Once again, that's money out of your account. So cash flow is going to be an issue. We've found a lot of customers have run out of stock. Once again, cash flow. If you haven't got stock, you don't have sales, and you're not having cash flow coming in. So definitely start communicating with your actual banks and start forward planning any imports or exports that you've got. Start getting close with your suppliers, customers, logistics companies, and also your banks to try and minimize all of these current logistics issues. We'll have a question and answer session at the end. So if you do have any current logistics issues that you're facing and you would like to raise those questions, definitely raise them. But from a document point of view, if you need more details, you can either contact myself or your logistics company, but do that once again in advance. And from moving your goods, it's about getting everyone involved and communicating nice and early. Back to you, Virginia.
Thanks, Mark. Well, that was very, very good advice. So thank you very much for all that clarification. Well, we do now move to the question and answer session, and I've got a couple of questions here. This is to Nick and to Mark, or both of you or either of you, from Barry White, who's one of our vice presidents and very big in the agricultural area. He's saying, we understand the new compliance requirements will be introduced for food imports into China from January the 1st next year. These include decrees 24.8 and 248, I think it is, concerning food safety, inspection and registration requirements. Could you provide some background and how these changes will impact on food exporters?
I'll leave that one for Nick. Do you know some details about what's happening on the ground there, Nick, in relation to those changes?
So decrees 248, 249 have impact on a number of food categories in relation to importation regulations in terms of packaging requirements. And it's actually, there's a complex set of rules and regulations which come into force on the 1st of January next year. It's something that from a Victorian Government point of view that we are paying close attention to. It's something that we hope at some stage we'll be able to have further communication about in terms of perhaps events and the like. But it's part of China's process of going about formalising and putting the right sort of quality inspection practices in place for importation of food products. As food imports only exponentially increase into China, China is looking at ways to, I guess, better formalise its importation processes. There are a lot of complexities involved, and it's something that I think businesses need to be aware of and start to, if you are in dairy and a number of other food export categories, start sort of reaching out to industry associations, to specialists into food imports and the like. And as I mentioned, we're likely to come out in terms of having some more information about that with events and the like in the coming period.
That's terrific. And as I mentioned, Nick is going to be presenting at each of these sessions of ours, which run every month till November this year and run through next year as well. So there'll be opportunities for Nick to give us updates. Also, Nick, any information we're happy to put in our newsletter so that there are updates, and also, you know, if you need a hand with an event, so that that's taken as a given that we will obviously get this information out as widely as we can. Barry also has a second question, which I think will probably be to Mark. Yes. Can you clarify the level of insurance which applies to products contracted and shipped under Incoterms, such as CIP? And you're talking in 3-letter acronyms here, so
that's all
perhaps
good.
You could explain.
All right, so talking about these acronyms, Incoterms. Incoterms are an amazingly important acronym that everyone who is importing and exporting must fully understand. These Incoterms are universal worldwide, and they will define many things, including who pays for what, who gets the documentation, who insures the goods, and it is compulsory that you quote an Incoterm on every single quote, contract, invoice. It is a very important 3-letter acronym that if you don't understand, once again, start having a chat with your logistics company for more details. So the question is that what coverage of insurance should you have for CIP, which is one of the Incoterms, very similar to a more common Incoterm, CIF. They're very similar. So what type of insurance? Now, one of the things that people don't understand that amazes me is that importers and exporters assume that if the goods are damaged during transport, the logistics company, the shipping line, the airline, or the trucking company will compensate for the damage. The fact is, if your goods are damaged during transport, regardless of who does that damage, you will not get any payment or a very small payment for that damage. So firstly, I recommend that everyone insure their goods during transport. If you're an importer, make sure that it's insured, whether get your supplier to insure it or insure it yourself. If you're an exporter, exactly the same. Make sure that the goods are insured, because if they are lost, stolen or damaged, if you go contact your insurance company and ask for compensation, unfortunately, they're not going to pay. So first thing, important, insure your goods. To which value should you insure it? The industry norm is that you insure it for 10% more than what the goods are actually worth. So if you are selling the goods for $50,000, insure it for 10% more than that. If you're selling the goods for $100,000, insure it for 10% more. And you want to be insuring it from door to door. So it does not matter where the damage occurs, it is fully insured. Now, if anyone needs more details on either Incoterms or insurance, once again, I'm happy to have a chat offline. But in brief, to answer the question, you will always insure it for 10% more than the sale price. If you're giving them away free of charge, but there is a cost there, once again, if these goods were lost, insure it for the amount that you want to be compensated for.
Virginia, I might just jump in as well and just clarify, particularly for the newer exporters or businesses that haven't yet exported. Incoterms relate, it's a shortened form of international commercial terms, and it really donates carriage. So who's responsible for the carriage of goods, irrespective of where they originate and where they're going to? And in the case of CIP, it's carriage and insurance paid, and that implies that the seller is paying for both the freight costs and the insurance costs. There are other terms that are on the opposite end of the scale where the buyer would be carrying those costs. So if you are exporting for the first time, you need to be very careful about the Incoterm you choose, because it will determine whether you have obligations and rights or whether your buyer has the obligations and rights, and where those obligations shift from you as the seller to the buyer. And if you choose the wrong term, you could really be in a world of pain. So just be very careful about the term you choose, and as Mark alluded, get some expert information and advice. But certainly CIP, you as the seller will be carrying both the freight and the insurance costs.
Now, they're the only questions we have online. I'm wondering if any of our panellists would like to make any further comments. We have around 5 or so minutes left. Does anyone have anything else they would like to raise? Yes, Yuri, thank you.
Yeah, yes, Gina, Mark made some good comments about cash flow. So whilst we don't assist on the import side, there is the same issues on the export side. So businesses that might necessarily have needed working capital finance from us previously, they might have found their existing facilities are getting stretched by their current provider. So they now all of a sudden need additional working capital to help, with that cash flow of export orders. So that's something we can always assist with, because that's where we are seeing the same thing that Mark's referencing is time to get product for imports to build and develop, and then the time taken to get it on a ship and export it is increasing working capital cycles at the moment. So we can definitely assist in that space.
Yeah, we've seen on the export side, as I said, where the transit times are blowing out, and depending on your agreement with your customer as an exporter might be that they pay you when the goods arrive at the destination. Now, if the transit time has gone from 3 weeks to 6 weeks, that's once again, you don't have the money in your bank account, you have the cash flow. If you happen to be going into Europe or the USA, for example, I had a situation recently where we can normally to the USA, we get there in 3 weeks. We're now doing it about 4 weeks, but then to get it off the port and delivered, it took 6 weeks to get it off Los Angeles port and moved inland. If your agreement, once again, is that you get paid upon delivery, if you're going to be not paid for rather than the normal 3 to 4 weeks, but now 8, 9, 10 weeks, that can have a massive effect from a cash flow point of view. So you need to be forward planning, and once again speaking to your bankers and making sure that they're well in the loop of what your current situation is.
Yeah, that's really clear example of that, Mark, because I had a customer who actually was sending product over. They didn't need requirements, but they now do, who was to meet the summer market in the US, expecting to have it, this product delivered perfectly in early June, late May. and it didn't get there till August. Like, it's just arrived and they've missed the window. So it can
3 months.
never, yeah, it's people aren't going to buy that now because summer's ending. So it is really important to get your times and factor that into your planning.
Nick, I just wondered, did you have any final comments that you would like to make? We're just getting to the end of the session. Give you that opportunity.
Look, I think one of the areas that we focus on in market, we have a team member that's focused on agricultural trade policy. We have a team member that's based down at the ports in Guangzhou. We constantly engage with different businesses that are either existing exporters or new exporters into the market. And one thing that, obviously on the regulation side, as I sort of mentioned at the start of this session, understanding what are the import regulations, understanding what are the requirements for labelling, what are the requirements for my product to be able to sell legally through the channels that I plan to sell through. All of that, and then getting the paperwork correct, understanding, what certificates are required, the packaging for those products, so on and so forth, are often the differences between, significant clearance times at ports and relatively smooth sailing, pardon the pun. And obviously, given COVID and all of the different dynamics when it comes to international shipping, whether it be container availability, whether it be air freight prices and also capacity as well, there's so many, and also, to be quite, raising the elephant in the room, the bilateral relationship as well. There's a lot of dynamics at play when it comes to exporting at the moment into a market like China and any international market. So making sure that you do reach out to the relevant authorities or organisations to get support to make sure that all of those relevant documents and paperwork and knowledge of the entire process and the supply and value chain are going to be just the beneficial means for you to have a successful and smoother process into exporting, in particular in more challenging environments as they are at the moment. Now, that all being said, and yes, it's challenging, there are still market opportunities in China. So there is an ongoing demand on the whole for many categories of Australian products and Victorian products. So we're seeing a lot of positive consumer and also supply chain demand for products. And so look, I just think this entire topic and then the topics that we're going to be touching on in the preceding events are all relevant into navigating effectively in changing and dynamic circumstances so that you can reach and maintain success within the China market.
Thanks, Nick. Well said. That's terrific. So in closing, I would just like to thank Collins, Mark, Nick, Yuri and Chung in his absence. It's been a very, very enlightening session. We are here to help, as are you all, and I hope our attendees will reach out and ask you any questions that they need or any advice they need. I will give a special thank you to Global Victoria for supporting this important series, which, as I mentioned, is designed to inform and empower businesses to export to China, either start exporting or expand their exports. We do have 8 sessions in total in the series, another 7 to come, and we'll be covering a lot of aspects in this sort of detail. So I hope our attendees will zoom in again to join those other sessions. I'd like to thank our wonderfully hardworking staff behind the scenes. Zach, who was the primary organiser of this event, assisted by Alex, and to you, our attendees, obviously, for supporting ACBC. We do important work in disseminating accurate facts and about doing business with China, our #1 trading partner, and we're not shying away from discussing the complexities of the issues around doing that business. As well as export, we have a comprehensive multi-sector program planned for you for the rest of this year and into next year. Our next session is as part of our science series with the CSIRO on biomaterials and biotechnology health sector opportunities. And we even have a scientist who is currently working on a new COVID vaccine, and she said she may appear in her full PPE gear to do the presentation. So we're looking forward to that next week. We also have our virtual Australia-China Health Summit, which will be half a day on the 7th of September, and over 4 distinct sessions. We've got an eminent lineup of speakers addressing ongoing challenges, collaborative solutions, long-term opportunities, and those unique pathways for medtech to launch their products to a global market via Australia. So we warmly invite you to attend that online. Details on all of these bookings will be sent to you along with a summary of today's session and a recording. So please check your spam and junk box in case it ends up in there, but you will receive that. And in closing, once again, thank you to our wonderful speakers. It's absolutely delightful working with you all. And I thank everyone for their attendance. So have a good day and stay safe. Thank you.
Thank you.
Thanks, everyone. Goodbye.